You're watching SmallCapSteve Live. I'm SmallCapSteve. We got today. We've got Taz Turner from CordovaCann Corp, Canadian cannabis retailer with some operations in the U.S. Kind of just getting started. We love talking about cannabis, as you all know, talking about what's going on in the U.S. In addition to that, later on we'll be getting into the Canadian small cap news as we see Canadian small cap tech names just keep ripping. Whether it's Iguana, Powerband, Q Media, I can name a dozen more. It's an exciting day for us small cap junkies. So let's get started. So joining Jay and I today is Taz Turner. Taz, can you hear us?
Yes, thanks for having me on.
Well, thanks for joining. So very quickly, high level, you're CEO, chairman of CordovaCann Corp. What can you tell us about the company?
Sure. So CordovaCann is a Canadian listed company. We trade both in Canada on the CSE under CDVA and on the OTC in the US under the symbol LVRLF. We currently have operations in the retail dispensary business in Canada. We have 5 stores open now, and then we have another 10 in the pipeline for a total of 15 that we hope to have open by the year end or sooner. And then we have an operation currently in Oregon. It's a cultivation operation. We just took finally the transfer of that license into our possession in November, and we have done the majority of that build out to take it to the full 10,000 square feet under a tier 2 cultivation license. And we'll be adding manufacturing to that site as well. And then eventually have a vertical operation in Oregon and look to essentially expand into other markets in the States with vertical operations.
Jay, it sounded like you had a question there.
Yeah, I was going to say, let's start with Canada.
Sure.
Retail operators in Canada to date, they've been a bit underwhelming. If looking at Fire and Flower, they're kind of viewed as a leader in the space, and they can't seem to post a profit to save their lives for whatever reason. What made you get into retail in Canada specifically? Sure.
So actually, if you look back at when we started Cordova, we said we would never get into retail. And it was really because of what I thought were the lower margin part of the business. And that's actually predominantly true. What happened was in the beginning of this year, really late last year, the beginning of 2020, late 2019, we were presented with the opportunity to buy some assets from Starbuds International, which was at the time the sister company to Starbuds in the US. And so upon further digging, Starbuds in the U.S. Was one of the most profitable retailers, actually the most profitable retailer I had ever seen. And I've looked at, probably 100 retailers across Canada and the U.S. That was, outside of the one-off mom and pop retailers that had, more than one store. And so, Starbuds U.S. had a chain of 21 stores and growing and had incredible EBITDA margins. And the idea was we could get these assets for a very good price because they were not able to get them approved in the regulatory process in a timely manner. So we could pay, call it 25, 30 cents on the dollar for these assets. We'd done enough diligence to know we could open them in the Canadian markets. And we thought that if we had the blueprint of Starbuds US, of which Brian Rudin, the CEO of Starbuds, is a special advisor to Cordova, that we would be able to generate very strong returns on capital. And so that's really the genesis of why we did the deal. And, we talked about it back in the April-May timeframe when we did the deal. And what we thought has proven out to be true. The stores are literally nicely profitable out of the gate. The returns on capital are probably better than we'd seen in anything else we'd looked at to date. And, the goal of setting, when we set out to build Cordova, was to focus on profitability. And that hasn't changed since the very beginning in late 16, early 17. And so we're turning that corner. And yeah, we're very excited about the retail operations in Canada. And, we'll look to bring that blueprint to the U.S. in the not too distant future.
So I find this kind of interesting. What's Starbuds US? Like that sounds like my understanding for people from talking to CEOs of MSOs and people in Colorado is that Starbuds is like a real operator, probably goes public on its own at some point, I would assume. How does that agreement work if you guys want to open up other Starbuds and say, like, I don't know, like Michigan or Pennsylvania or something like that? Do you guys have exclusive rights? Can you talk about those mechanics?
Sure. So in Canada, we own all of the IP and the federal trademarks to the Starbuds name. We don't pay any royalties to Starbuds US. It's totally ours. That was part of the asset purchase back in April of 2020. So in Canada, we can put up as many stores as we possibly can, and obviously good retail locations, which we've done a pretty good job of to date. In the U.S., we could put up U.S. stores in most likely in markets they're not in. We would have to have an agreement with Starbuds U.S. to do so. So right now we don't have any agreement to do so, but certainly I think they're open to it, and we could do that, or we could go out on a different name in the U.S. if that wasn't if we didn't come to an agreement. But there are options there. But right now we have total control of of those names in Canada. And in the U.S., it would have to be determined via a conversation. We've had some conversations, but nothing's set in stone yet.
What kind of EBITDA are Canadian stores doing right now? Like margins, and because like I see a bunch of them, they seem like they're kind of cheap, but none of them really seem to generate cash flow. Like how do you evaluate where to open a store? What kind of returns are you looking for, etc.?
Yeah, so we've predominantly gone to what I would call our secondary or tertiary markets in Canada. A lot of especially in Ontario, a lot of the guys are focused in that greater Toronto area, and I think it's not saturated probably yet, but it's gotten a lot more crowded more quickly. So we're looking at those markets that can be supported by 20, 30, 40, 50,000 people in that market. The stores, like I said, we're usually one of a couple in that market, if not the only one in that market in certain markets that we're in right now. So we're evaluating them just like any other retailer would. We want good locations. And right now, like I said, the returns on capital have been incredible. We're putting up, just to give you specific economics, we're building a store for roughly 150 to 200, 210,000 Canadian. And the payback periods are significantly less than a year. I'd say, right now they're probably hovering around the 6-month mark. I can't really comment on the other retailers. I know that a lot of guys have struggled to generate cash flow. I don't, think that'll be the case as we continue to grow here. And just, lastly, to answer your question more directly on the margin standpoint, on the margin front, our gross margins have been very, very consistent, probably within 100 basis points of 35% on a daily basis across all the stores. So really the trick here is to manage your rent and manage your OpEx. And if you can do those things, which we've been able to do, these stores can be nicely profitable.
Here's a question from the audience. Betting Bruiser comes in. Everybody knows Bruiser. Former Afria CEO Jacob Ripstein is on your board of directors. What's his role in the company?
So Jacob, just to be clear, I think Jacob was the president or COO, not the CEO. But Jacob has an active role in the company. He's on the board. He's been able to, we have a very active board, which I'm very thankful for. And Jacob is one of those guys, and he's been really helpful in helping us, put together the strategy, as well as look at potential opportunities as we look to grow the business, both organically and inorganically.
What's here? Go ahead, Jake.
So you mentioned with retail cannabis in Canada that you're focusing on kind of secondary markets, and you kind of seem to be doing that same thing in the U.S., being in Oregon. What drew you to the state, considering so many people just view it as a bad state for public companies when it comes to cannabis?
Yeah, it's funny. This has been a refrain for quite some time. We've been involved in Oregon since 2018, and I've read all the stories and heard all the questions about, oh, cannabis is selling for $50 a pound. In Oregon, with that current operator, we haven't seen anything less than $1,200 a pound throughout our entire time and our entire involvement in that operation. Right now, we're seeing considerably higher than that. Kind of north of $1,500 a pound. I think, our philosophy is across all of these markets is that it's about the operator. There's certain operators, and really when it comes down to it, it's about the operator's network and their ability to sell. They obviously need to be able to produce good cannabis, but there's a lot of guys that can produce a good cannabis. So what it comes down to is those guys that can produce good cannabis, can they sell it? And, we look to get into operations where they have more demand than supply, and then look to expand those operations to backfill and meet that demand. And that's exactly what we've done in Oregon, and we'll look to do that in other markets as well. And I think you'll see us make moves on that front throughout the remainder of this year. But yeah, that's really what it comes down to. I guess also just to answer your question a little bit differently, we've always focused on the more what I call developed markets. I hate the word mature because I don't think any of these markets in the U.S. are mature. But where there's a customer that's already built in, we've already seen the commodity price go down 60, 70, 80%, whatever it is. And there's a lot of operators that have come out the other side of this and been able to, generate a ton of cash flow in that cycle. And, now, and in those markets, things have plateaued, or, I shouldn't say plateaued, become more steady state in terms of pricing. And so, we're looking to take advantage of that. We think we can acquire them at better multiples. We think we can grow them to meet more demand, and there's already a built-in customer base in those markets.
So you're coming at us from North Carolina today, right?
I am. I'm in North Carolina. Yes.
Okay, so I got to ask. We don't hear much about North Carolina and South Carolina in terms of cannabis. What's going on there?
So North Carolina is mostly a hemp state. I mean, I officed out of New York for the better part of my career. I've been down here for a couple of years. It's a very big hemp state right now because obviously with its tobacco roots. I certainly didn't move down here because I thought North Carolina was going to be the next state to fall in cannabis. And so, this is home for now. Obviously, COVID's thrown a wrench in some things. So I'm stuck here more than I normally would be in wherever I'm living. So yeah, I mean, it's a hemp state now. I think, obviously as we make strides towards, federal decriminalization and legislation, this will be a state that makes sense. Just given its tobacco roots, but I'm certainly not here because I think it's the next state to fall.
Okay, go ahead, Trey.
I'm going to build on that question a bit. Being in North Carolina, how did you become the CEO of a Canadian cannabis company focused on retail in Canada?
Sure. So, I mean, it really had nothing to do with North Carolina. I've spent my entire career out of New York City. My background's in investments in both private equity and hedge funds. And I started a hedge fund back in 2009, started trading in 2010, and focused mostly on technology and consumer. I took a left-hand turn, as I like to call it, and started investing in cannabis in 2012. At that time, all in Canada. As I got, at that time I was toe deep into it, and I got, ankle deep, waist deep, and now I'm, neck deep into the cannabis space. But as I got into it, I really realized that, yes, at first I'm not a user. It wasn't a passion project for me. It was all about what I think this market can become, both in Canada and the US. And really at the time when we started Cordova, it was really about showing the investor that the way that it was done to that point was all about, focusing on square feet and how many square feet people can grow and what the, revenues maybe could be 10 years down the road. When I got into it and started doing more and more diligence, I realized, hey, there's a lot of guys, especially on the West Coast of the US, that are generating fantastic, EBITDA and cash flow margins. And the public investor, is sitting here just seeing, companies lose money hand over fist. And so the idea was, the investor, which I was one for the last 20 years, needs to be able to see the other side of this, that a lot of money can be made in the cannabis business. It's just that these companies aren't public yet.
So your background is you're a former hedge fund manager?
That's correct. Yep.
Yeah. Okay. So I find this kind of interesting because I was investing in some of the U.S. cannabis operators 2-3 years ago when there was only just like a handful of them that you could actually even begin to look at. And I got some buddies who run hedge funds in the U.S. and I'd always be telling them like, look, this is an exciting opportunity. This isn't like Canada. You're going to have real operators that are going to generate real EBITDA, real cash flow. And now's your chance to get in before a sea of institutional investment pours in. And I remember one buddy who runs a fund out of the U.S. and I got him into Ianthus briefly at $3. It ran to $6. He got out. And then it went up to $9, and then ultimately went like down to near $0 and bounced back a little today. I'm not sure why. But I remember he used to always say to me, Steve, you just can't convince me it's not going to go to $0. And at the time, like, the stock was like $6, $7, $8. It's like, are you crazy? This thing's going to the moon. And so I'm curious how your conversations within your peer group, being a money manager, especially living in a state like North Carolina, now you're saying that you're making money sort of in cannabis. How do those conversations go for you amongst your peer group?
Yeah, so I guess the most direct answer is, I was a very active investor and a very fundamentally, did a lot of homework, did a lot of diligence type of investor. And so, like I said, I got involved in Canada originally. And, quite frankly, I didn't make as much money as I probably could have. Everything was great. I mean, Tweed and Metrum and all those guys, those early players back in the 2013-14 timeframe, they all did nice. But I did a lot of diligence. I flew to Canada. I flew and saw the operators. I saw, buildings of 100,000, 200,000 square feet that had a lot of people in them, but were empty. And it was just the state of the market at that time, but people were selling dreams. And, I was an investor on total dreams. I was a fundamental investor at heart. And so I just said, at that time, I said, this is going to end badly. Matter of fact, when I started Cordova with a group of people, I said, we took the tact of this bubble is going to burst any second now. And it took 2 years, and which was a lot longer than we thought. But the eye was always on profitability because of that fear that the bubble was about to burst. And we also took the tact of we're going to raise money. I like to call it on a just-in-time basis, meaning I'm not going to go out and tell investment bank X, Y, or Z that here's my dream and let's raise $50 million and I'll go figure it out later, which is what a lot of companies did. And quite frankly, I'm not so sure that wasn't the right thing to do at the time, looking back on it. But the idea was, hey, we're going to identify operators. We're going to show you the deal. We're going to show you it's a profitable business, and then we're going to raise money around that. And so that's what we've done. That's what we've done to date, and we'll continue to do. Obviously, I think we can probably, raise higher amounts of capital over time and use our stock to our advantage over time. But that was really the idea and the genesis behind Cordova, and it really all started in the sense of a lot of those conversations and diligence trips with all the companies that I was investing in at the time. And then I will say, once I started getting, once I took the full-time CEO role of Cordova, which was at the end of 2017, I just thought that, listen, I talked to Hadley at Ianthus and I talked to Mark at Canna Royalty and all those guys. I mean, I had meetings often because I was invested in some of those names. But once I took Cordova on, as a full-time role, I stopped having those conversations more just because I thought it was the morally right thing to do, and not be digging into somebody else's business because I didn't want them to think I was using it for an operational advantage. So yes, I still have those conversations, but it's much, it's with my operator hat on and no longer my investment hat. And, quite frankly, I think we've taken a different tact than a lot of those operators have. And some of them have shifted, obviously, over time.
So got to ask, how are you forecasting the regulatory environment playing out over the next couple of years?
So I actually, going into this last election cycle, I thought that regardless of who won the election, I thought, over the coming 4 years, we would see a move towards decriminalization and federal legislation. I think, given the Senate, shifting to Democratic, I understand the perception, obviously, and I understand why these stocks are running, because I do think it's going to happen a little bit faster. But in my mind, it was always happening over the next 4 years. Whether it was over the next 12 months or 24 months or 36 months, I didn't really know. But we've been preparing for this kind of next, this 4-year cycle for things to change dramatically. And obviously, as you've probably seen, some of the more prominent senators have come out more recently and said this is on the top of things that they want to tackle. I do think it'll take time to implement, but we're moving as fast as we can without being hasty to identify the right projects that we want to do and grow the business, because we want to be there in a prominent role once we do see the federal legislation.
How much have the conversations changed with talking with fund managers, people who invest, potential investors? My belief would be 3 years ago, if you were talking to an American investor, it was pretty challenging to get them past, I've got a cannabis opportunity for you. Versus today, it's clear, the writing's kind of on the wall that we're near that sort of decriminalizing, descheduling point. How for you, how much have those conversations changed when talking to potential investors in the U.S.?
I mean, they've changed dramatically. I mean, just to give you a sense of it, forget about the institutional type of investors. Those conversations weren't even happening, 3-4 years ago. Even with individual investors back 3 years ago, there was a lot of conversations I had where they couldn't invest at all, and there's still a vast majority of the financial people that I know, in the circle that I've been in since for the last 20 plus years. They can't invest in this space because of the compliance issues that they have at their employers. But even just kind of the high net worth individuals that were investing, there was a lot of people that absolutely could invest and didn't invest because they were worried about their bank account being frozen, or that they were going to get a call from the FBI, or there was all kinds of things, right? And to be very honest with you, I mean, I had a lot of conversations with potential acquisition opportunities back then, where they'd gone through multiple bank accounts for their business. They weren't trying to hide the fact they were obviously operating in legal states where they had their personal assets frozen. So I understood the fear. I didn't think it was obviously going to trickle down to the investor. But really, when we started Cordova, there was a lot of conversations like that. And now I think there's, obviously the individual investor has changed dramatically, but I think there's still a ton of room to go on the institutional investor side. I mean, most of the guys that I know of, and granted, I worked for a couple of big funds, most of those guys still won't really touch cannabis in any sort of meaningful way. And some of them won't touch it at all because they just don't want they just don't want to deal with it relative to, having, a couple $1 billion and have it as a distraction or a potential, downfall to their overall business. Because, there certainly still are investors out there of these bigger hedge funds that don't want to be involved in cannabis. And so they don't even want to take on that perception at this point. Certainly there's a lot more institutional investors than there were 3 years ago, because there was probably only 10 back then. But yeah, I still think we have a long, long way to go on the institutional front. And it probably comes when, I'm not so sure people wait for legalization, federal legalization, but it probably starts coming when we start seeing the Banking Act come through, and we start to see bigger steps made towards deregulation and legislation, or legalization. I'm sorry.
So, I agree with a lot of that. I mean, we've actually had guests that, whether they be in the mining sector or whatever, because we've talked cannabis in the past, it's always related to legal cannabis, but they won't even come on our show because they don't want that connotation. So I feel we have a long way to go in that regard. The one question I have, though, is with the Democratic sweep and everything else, what have you seen on the private side of things? So Steve kind of went the fun side, but I want to know, like, in your discussions, have the prices of private assets gone up considerably since the sweep, or since call it November, when we saw how things were likely going to go? Have you seen any change there compared to, say, 6 months to a year ago?
I think we've seen some change. I don't necessarily think that it's going to cause our multiples that we pay on the private side to increase all that dramatically. I think at the end of the day, private companies that are looking to sell some or all of their operation are looking to partner with public companies because they see that that's, a growth vehicle that's obviously getting a lot of play right now. So I think there is some advantage there. So I don't expect our multiples paid to go up all that dramatically, but certainly there's a different tone that's taken from the seller side now because they're excited to see all of their peers and public companies and the cannabis market in general being getting a lot more coverage and a lot more hype in some cases. So I do see that. I do see a lot more confidence in the sellers than we saw a year ago. But I don't think the multiples will change all that dramatically. And I think we have an advantage as a public company to be able to grow the business both inorganically and organically, and be able to command a higher multiple for that in the public market.
Have more assets gone up for sale in the time since, just as a function of, oh, hey, now's my time to cash out because I held it through this period and now it's someone else's hands?
It's a good question. I actually don't know the answer to that. Probably by default, yes. I think it's also because there's more buyers in the market right now, especially just given not only the cannabis craze but the SPAC craze. So you've seen a lot of the guys go, that are looking into cannabis SPACs to go public. We've seen a lot more of more sizable companies in the U.S. kind of bond together and go out public as one entity. So I do think that the sellers, by default, just given their more buyer interest, there's probably more things for sale. But we're finding plenty of stuff for sale. We were finding plenty of stuff for sale, before all of this too. So I can't directly comment on what the magnitude of that change is, but it's probably there, and but I don't think it'll hurt our ability to carry out our plan.
Something I like to ask people in your shoes is, how do you go about diligencing a cannabis operator, right? Like, we almost made an investment in a company in Michigan, a private operator. It ended up falling through, but at the last minute, the broker who was sort of putting the whole thing together said to us that the operators they were working with, they didn't even own 3 of the licenses that they were packaging for investment. And that's just like one anecdote. I could probably tell 100 of those. How challenging is it? Because I feel like you probably walk into a lot of stuff where you spend like a considerable amount of time on it, and then you just find this gigantic hole in it, and you're just like, that was a waste of time. So what's your process, and how do you go about diligencing operators for potential M&A?
Yeah, well, the good news is time has helped in being in this business because 3 years ago, I'd say 9 out of every 10. It took about an hour to figure out that there was a gaping hole in what they were doing. And obviously, there was a lot of imposters in this business, and there still are. Quite frankly, I tell people all the time that I've met more I've met more kind of imposters in this business in the last, call it 4 years, and it's probably 3x what I've met in the previous 20 years of my career. And I don't know what it is, because a lot of them don't even have a financial incentive to do so. A lot of them are holding themselves out as in different parts of the business. And so it wasted a lot of time. The way that we've kind of eliminated that, or tried to eliminate that to the best of our ability, is really within the network, right? You finally meet, one person or 2 people or 10 people that you really trust and that understand this business, understand what we're looking for. And so, we don't just go after anything and everything anymore. It usually comes through a network that I've built over the last, 5, 6, 7 years, I guess now. And so that's a good starting point, first of all. And then second of all, my background is in diligence in companies, both private and public. So, we dig into it. We go see the operation. We do a significant, diligence on their financials, on their operations. And we're buying, as I mentioned before, we're buying operators that are already operating. I'm not looking to get into the next, greenfield opportunity in Missouri or Michigan or Illinois or whatever it is. We're buying operators that are immediately accretive to our business. And so that's a big difference than somebody that says, okay, well, we'll just make a bunch of assumptions and then move into this market. That's not really the our MO right now, and nor do I expect it to be at any time in the future. So it's a process for sure. But we've eliminated, I think, of the upfront problem of getting a ton of stuff where you fly out, you look at it, and you know within an hour that, hey, this isn't going to work. This isn't what was represented to us. When it comes through the network, it's already vetted considerably, but before we take a deeper dive.
Mm-hmm. So if getting back to CordovaCann, so let's say that we have you back here December 31st, it's New Year's Eve, you're looking back at the year 2021, and we want to judge your performance as the CEO chairman of CordovaCann Corp. Forgetting share price, but share price aside, how should investors evaluate your performance?
Sure. So I'm happy to come back on. I'm not so sure on New Year's Eve. I'm just hoping that I'm able to get out of the house on New Year's Eve at this point. But yeah, I mean, I think, outside of share price, obviously, which as an investor by background, I think that's the biggest measure. But outside of that, I think it's really just executing on the strategy that I just laid out, which is to grow inorganically and organically to grow the business. But at the crux of it is profitability. Judge me on my profitability and how profitable we are now versus how profitable we are at the end of the year, and what that run rate looks like going into 2022 and beyond. Because that's what we're focused on. And I've always said that I don't want to be looked at any differently than any other widget company. And the fact of the matter is, if we can make good, smart acquisitions and good, smart decisions, and whether it be building another retail store, whether it be putting up a manufacturing facility, then it doesn't matter what multiple we get. At this point, just given where we are, we'll be considerably higher as a stock than where we are today. And so, yeah, judge me by that. Judge me by the profitability of the business. Not only on, did we put up more stores and did we get more operations under the Cordova umbrella, but what's the profitability of that entire operation?
Okay, well, thanks so much for joining us today, Taz. This was really fun. We love having guests on that can talk about U.S. cannabis, and I'm very excited to see you guys roll out your strategy over the coming quarters.
Awesome. Thanks so much, guys. Thanks, Steve. Thanks, Jay. Appreciate it.
Thanks.
Okay, so Jay, let's get into small cap news in Canada. What's where do you want to start?
I'm open.
I saw that there was something that had you pretty worked up this morning. This precision drilling news. They conducted $9 million in share buybacks after they got a $10 million emergency wage subsidy. Time for a J rant?
Stuff like this drives me freaking mental. To me, there's so much wrong with the entire idea of taking a government subsidy and effectively sending it back to shareholders. Now, let me be clear. That $10 million they took was the fourth quarter alone. Throughout the full fiscal year, they took $26 million. And that $9 million, $6 million of that was done in the fourth quarter, and $3 million was done subsequent to. So that means January, February of this year. Now, legal or illegal, I in terms of the agreement that they've entered with the government regarding the wage subsidies, I don't know. Twitter has told me that it's permitted under the rules. However, I'll be honest, I don't give a shit. The whole notion of taking government money from taxpayers, yes, money is printed endlessly, I get that, and CERB is what it is. However, taking $10 million from the government so that you can literally buy back your own stock, piss off. Like, that's not what it's intended for. This subsidy is intended for people that it keeps them employed. Now, on paper, they said $8 million of this subsidy went to operating expense and $2 million went to general and administrative expenses. Whatever. You can say that money goes into this bucket, but at the end of the day, you took $9 million after receiving 10 and bought your own stock back. Like, why that's permitted under the whole subsidy legislation is beyond me. And to me, it needed to be highlighted because it's a pile of shit. It should not be permitted whatsoever. Like, right or wrong by law does not mean right or wrong ethically. This is unethical in my mind.
Okay. I think the term's unethical. But get your point.
Whatever you want to call it.
Chase, fire up!
Folks! It takes a lot to fire me up, and this had me pissed off when I read it this morning. And the company actually commented on it right after commenting on the repurchase of shares. So it shows that they weren't trying to hide it. But again, still unethical in my mind.
Look, I don't blame you for being upset about it. It's a valid point, but I don't know. Like I'm so confused by this world we're in today. Like all I want to do is I just want to sit around and watch Sundial go up and think about
forget
how
Sundial for a minute. It's up 40%. What's Tilray at? Tilray has been going bananas.
Tilray's going bananas again.
It was $65 pre-market, and I've had my head down.
Tilray hit $65
in pre-market trading. It did.
Tilray
52. Jeez.
Fucking Tilray? Is it back in the 50s, 60s?
Fria was at $30 on the U.S. side this morning.
Woo.
Don't know when that happened. I thought it was still a $12 stock at best. I still think it's.
My.
Yeah, it's ridiculous. Everything's up, and
I'll be honest. Piles of crap. They're all piles of crap.
I'm really starting to get nervous about everything, just the way everything's moving.
Let's pull up Tilray's numbers here.
Oh God, do we want to do that?
Well, we always want to do that. Let me go into my Y chart here. Who knows how accurate any of this is? Paid Y chart's a whack load of money, and half the information is not even accurate.
Yeah, so I mean, for those of you who are unaware, they are effectively purchasing Afria with Afria shareholders receiving something like 0.83 of a Tilray share for every share held of Afria. So that thing's been on the move as a result. So
in the last 12 months, they've burned $195 million in operating cash flow to the tune of negative $437 million in EBITDA, a negative $487 million net income, only generated $200 million in revenue, yet they have an $8.3 billion market cap. On the balance sheet, they've got $155 million cash. What am I missing?
Total liabilities of $700 million? What?
Sundial's cheap, folks. It's cheap. We don't burn as much cash as they do.
I actually think Sundial's better than Tilray in this instance.
Sundial's better than all these fucking companies. Give me a break. We burn less cash. We give you free bits of rubber gloves with your cannabis. This is just
COVID world.
We are dinosaurs in this market. Like we look at income statement and balance sheets, and we read accounting notes. What is wrong with us, Jason?
Oh, I don't know. Look at MedMen. What's MedMen at? We might as well continue with the pain at this point, right?
I'm at the point where I just pull up the Google numbers. MedMen's making a comeback. Don't call it a comeback.
$1.68. Like, why is this thing up 37%?
Oh man,
unbelievable.
This is stupid. This is just.
It's like I said. I'm starting to get uncomfortable with the valuations and the moves we're seeing.
Yeah, I like to say. This is my plug for my folks over at Iguana Technologies. I'm hearing that we're going to get a little bit of allocation in that financing, by the way, which I hope that we do. Otherwise, I'm going to be bitching about it on this show for the next month.
Yeah, so I hope we do for that sole reason.
But I believe that right now I'm not comfortable that this bubble's over. And I believe that you have to look to the quality names, the names that you feel offer the most attractive risk reward. If you're in small cap tech, you're probably going to do quite well. But you want to be in names that, and this is another thing that I was thinking about the other day is for us, our I don't know about you, but at least for myself, my recency bias when I look at the Canadian capital markets is all the cannabis names, where we saw a ton of capital pour into the Canadian cannabis names. But the fundamental difference between them, what's happening in psilocybin and what's happening with a lot of these tech names, is that they all did things like build these gigantic warehouses with expensive equipment and sign debt and debenture agreements that they had to pay back. So there was something that pulled them back down to gravity and created a lot of risk. What's the risk for these Canadian small cap tech names? I'll tell you what the risk is. The valuation's too high and people are going to stop buying the stock. That's the risk. It's not like they're going to have to raise cash. Sorry. There still could be the risk that management's going to do something stupid, like go buy some sort of asset and raise a bunch of money through debentures or debt. But failing that, like there's no like balance sheet structure reason that these things are going to have to come back down, right? Like it's not like they have to raise cash. So I see that as a big fundamental difference between what's happening now and what happened in the great cannabis cycle of 2018, 2019, when 2020, when things were looking pretty bleak. Like heck, Weed MD's even made a comeback.
A lot of stuff has made a comeback. I'm actually just I was scrolling through news releases yesterday. I'm looking at my other screen here, so apologies.
Well, you can do a screen share.
It's
2021. We have the tech, baby.
I'm looking to. So, 1 second here. Yesterday at the close, I was going through Newswire, as I always do, because that's my life, and I can't get away from the computer for 10 seconds. 1 second here. Let me close off some other tabs.
You're a masochist.
So,
here we go.
I was scrolling through, and it's kind of split up now just because of how things. But look at raises here. So 6.05, 30 mil. Where was it? 5 million, 15 million. $75 million bought deal after doing a $66 million investment. The amount of money being raised right now is just insane. And this is how it's lining up right now is poor, for example, purposes. But the amount of money that's being raised on a continuous basis is just ridiculous. I did not
Look on your screen.
So we can
They're
see.
catching me eat my fry supreme, delicious fry supreme from Taco Bell.
Oh man, I'm jealous of that. But yeah, the amount of money being raised and flowing into markets is just unfathomable. It's hundreds of millions of dollars. Cannabis, since the start of the year, I believe young Justin himself has been tracking it. I think yesterday he told me something like 2.5 billion, or just some mind-boggling number since January 1st has been raised. Where's this money coming from? Is it just a function of inflation or what? Right? Like, I don't get it, and it frustrates the hell out of me.
In you know how it works? The FOMO kicks in, right? Everybody sees money being made, and they hear about their buddy that they knew in high school who just made a bunch of money in a stock. He's bragging about it on Twitter and like a friendly chat group, and then everyone's else like, oh, he's making money. He can't make money, and I don't make money. And then they all pour in, and like I heard those stories about what's his name? Is it Kevin Murphy from Acreage? That in the early days he raised all of his money on like one golf course in Palm Springs or something like that. Where
I haven't heard that story.
Yeah, and he just this is what someone told me. I haven't vetted it. I don't know if it's true or not. But he said that like he was on. It wasn't Palm Springs. It was in Fort Myers, somewhere near Fort Myers, one of those rich areas in Florida, like west Florida. And Kevin Murphy went to like a really elite golf club, and he pitched Acreage Holdings. And once he got one of the guys at the golf course to cut a check, everybody around him was like, "You're not going to make all this money, and I'm not going to get to participate." Right? So it's not just like a high net worth individual thing. It trickles down to the butcher, the baker, the candlestick maker. All of them see people around them making money, and they're like, I got to get in, I got to get in, I got to get in. Like my parents back in the day bought Bre-X probably at like, I don't know, $200 or something like that. And they did the same thing with fucking Nortel. They're not finance people, right? They're like, middle level management people that live in the suburbs. And but when everybody's talking about it, they'd have to get in. And so
you don't miss out, right?
But getting back to fundamental difference here of what I'm seeing now versus when we're talking about cannabis or even mining, right? Because mining is cash intensive. You got these geologists and engineers, they want to actually run real projects. That costs money. That sucks capital, which puts, balance sheets strained. The company ends up raising more money. And eventually, you run out of capital. Here, I don't view capital inflowing into small caps as the risk. I view, more deal flow as the risk. So we're going to see more and more companies go public and soak up capital. And eventually there's going to be not enough capital for all the deals and things will pull back again, as always happens. So, but right now you could be a shit fucking name. You can be a bullshit fucking micro cap name and you can go catch a bid. Take advantage of it. If you're one of these names, take advantage of it. Go do some M&A. Go do some R&D. You've been waiting over a decade, probably since the .com, to have this opportunity where you're able to catch a bid. Take advantage of it. A name somebody called me about on the weekend, Edgewater Wireless. Remember them? Yeah. And they're like, fuck, Edgewater Wireless. Like, not a great microcap name, in my opinion. Former advertising client of ours. They would catch a tremendous bid in this market. They just would.
If they weren't halted, yes.
Yeah, they're halted right now. But if they weren't halted, and they should be running around the clock trying to get unhalted. I think we have warrants in them. That's, like, they could probably do some real stuff. You can hear my little girl crying.
Faintly, yes. Yeah. I mean, one thing to consider between, call it the original cannabis bubble and now, is no one at the time was getting stimulus. There was a lot less money in circulation. We talked about it yesterday, and I'll talk about it again today. The amount of money that's out there now relative to a few years ago is vastly different. So I imagine that is having some impact. I mean, we know the impact Robinhood has had, but let's face it, not all investors are putting their money into Robinhood names. And I mean, here in Canada, CERB and everything else, I've heard plenty of stories of kids on CERB taking that money and dropping it in the market. Still live with mom and dad, so their expenses are low, but they technically qualify, and away they go, right? So it all adds up, certainly. Whether that's the driving impact, I don't know, but it's always possible.
Yeah, so let's cover a couple more stories here. Jushi Holdings, they just raised a bunch of cash. Really quickly, break it down.
So Jushi, I can't say that name to save my life. $65 million, raising $10 per subordinate voting share, so 6.5 million shares dilution. There's a 30-day over allotment, 15% over allotment option on that as well. And funds there will be going towards Virginia. So they're looking to acquire the 93,000 square foot facility that they currently operate there through a subsidiary and do a build out of that to further capitalize on that market. On top of that, 33% of the funds raised will be used to repay certain outstanding senior secured notes. And I see I have a comma instead of a period, and that drives me nuts, so I'll have to edit that. Yeah. But yeah, so that purchase itself is expected to cost about $20 million US. That $65 million being raised is Canadian dollars, to clarify. To me, they're doing the right things at the right time, in the sense of if the capital's there, you might as well take advantage while you can, like you just said, right? Who knows what's going to dry up? So to me, it's the responsible thing to do.
Well, happy to see that they're making some progress in Virginia. Jushi, it's a name that I think seems a little expensive, but who am I to say it's expensive when Tilbury is trading at $55? Oh boy. Okay. Let's take a look at any other news here that I think we should cover. Level Jump had some news, Jay. They subsidiary just focused on distributing healthcare tech. What can you tell us about this?
So, quick little release. They formed a new subsidiary. They're looking to acquire or develop innovative products and services within the healthcare sector. I mean, they're already in the tech sector, but to me, I read this as they're looking to find tech that further disrupts the space. So right now, they're one of the dominant teleradiology firms within Canada, and I think they're just looking to capitalize on that and see what they can find out there. In discussions with Mitch, he seems real gung-ho to push this whole tech narrative as well in terms of finding some great assets to vend in and everything. So it'll be interesting to see what he can do with it.
Okay. And Curaleaf, they have opened up their 100th location. Congratulations to the Curaleaf fam.
Yeah. You know, these MSOs, they tend to put out a release every time they open a store. And I'll be honest, 9.9 times out of 10, I don't care, because to me it's mostly insignificant. But
in the words, I got Fry Supremo in my mouth.
Yeah, I'm sure that's what it is.
So what you're saying is that in the words of Shania Twain, when they don't announce or when they announce a retail location opening, it doesn't impress you much.
Yeah, I mean, it's great to see things build out, but it's not really worth covering. However, 100 stores is noteworthy. I think 35 of those are now in Florida, and they intend to open 2 more so that they're at 37 by the end of the month. So good progress from them. I don't think they're a dominant player off memory in Florida, but I mean, 37 stores is certainly noteworthy.
Yeah, there's a lot of stores. That is a lot of stores. So what else is going on today at the Dive? What else have you got going on here?
So young Justin this afternoon, I still got to get some editing done on it, but he's got a response from Canaccord on Canopy's earnings. I didn't think Canopy's earnings were all that great. Sure, top line growth is great, but when you're spending nearly $1 for every dollar that you earn, who cares, right?
So I don't really follow Canopy. I've seen enough to know that I don't really care that much. But why do they have 20% gross margins? How does that happen?
I'm not the one to ask.
Okay.
I don't know what they're doing there.
Is it because they're doing that thing where they like send a bunch of their weed off to like MetaPharm Labs or some third-party extractor? They could be private, and then they buy it back from them, and then they resell it. So their margins look lower, but they have a higher top line. That's what I assume is happening, or what is it? You don't know?
I don't know, solely because I know Kronos and MetaPharm, and I think even Heritage was involved in that, where they had to restate a bunch of financials because the auditor said that's not going to fly. So I don't know that that's what's happening. It might just be because of retail operations or something of that sort, or international. I don't know. I'll be honest, I haven't read the full financials. I know young Justin has, so maybe we can get him on later this week to walk us through things. But I'm kind of like you. I cover Canopy because it's well known in the space, and it kind of sends signals in terms of what direction things are going to go. But overall, I think that a lot of work needs to be done. They've incinerated an insane amount of money, and I just see so many better operators doing so much more with so much less, right? So it doesn't impress me.
Does anyone in Canada impress you much?
Yeah, that did you. I don't really follow Canada all that much anymore because it's disinteresting to me. I'll give a shout out to Indiva again. I haven't seen their latest financials, but they are starting to take a real commanding market share. Yesterday, they announced that market share now averages 44% off memory in across BC, Alberta, and Ontario, and notable markets for sure. I don't know if their financials are going to say that they're actually making money, though, which is what it comes down to. Cordova, who we had on earlier with wow. I'm drawing a blank.
Well, you know what though? I'm gonna say it. You know who does impress me much of the Canadian operators? Sundial.
Yeah, I'll give Sundial credit. They've raised a ton of money as a result of things. And yeah, I'll wear the egg on my face. Is it long-term successful? Who knows?
Well,
But I think that there has to be profitable operators out there. Probably private, but there's got to be, right? You can't tell me every single operator out there is losing money. Stop. They'd be gone.
You're going to hear me probably bring this tweet up multiple times. It's a shameless self-plug here. But I used to think I didn't understand cash flow statements. In microcap land, it seems 95% plus of companies generate negative cash flow. I thought clearly, I don't get it. Why would you bother being public if you can't make money? It took me 10 years to learn the stock is the business. And like here, a couple of dum-dums like us, we're sitting around going, they don't generate cash flow. They, not a lot of growth prospects. Doesn't matter, man. Doesn't matter because people want to buy the stock.
Yeah, I don't.
What drives these people? What drives you to want to buy Sundial? What drives you to want to buy Afria, Tilray? What's motivating? Like, are there just a bunch of like quants out there that run funds that like it just like hit some triggers and they're all just buying these things?
I have no idea. I don't get it, man. Right? Like to me, the whole genesis of investing is for growth and everything else. We know what the growth is in Canada, and we know that mostly public operators are not taking that growth at this point in time, right? We're hitting a saturated market. Long-term prospects aren't the best. Now, if some of these public companies can get into the U.S., it might be interesting. But even then, they're still years behind competitors in terms of Trulieve, GTI, Curaleaf, Cresco Labs, and on and on and on, right? So,
yeah.
I don't get it.
Okay, so who do you got coming on the Daily Dive on video today?
Today it is. I'm going to butcher this, and I apologize in advance. Georgie Wernley. He is a director over at Cresco Pharma.
I believe his wife's actually president of MindMed.
Yes, she deals with Cresco as well, but she is involved with MindMed too. I think she might have been maybe the founder. I don't know. Don't quote me on that. But certainly involved in the psychedelic space as well on that side. But yeah, he's on at 1:30 Eastern as always, and it's a great little interview. He provides some insights on Cresco as a whole, and we kind of publish it as a follow-up to Bruce Linton, who is a strategic advisor to the company, who was on the Daily Dive yesterday.
Okay. And let's talk disclaimers here.
Disclaimers. We are here for entertainment purposes only, and we have a lot of opinions, but that's all they are, is opinions. Neither you nor me, Steve, have any financial designations, licenses, etc. And that's that.
It's true. I failed the CFA level 3, band 8, which means that there were still 20% of the people who failed who did better than me. So I tip my hat to you, to my collective failures of the 2015 CFA level 3 failure class. But yeah, that's the closest I ever got to a designation. I'm not qualified to do anything except for recommend Taco Bell Fry Supreme. It's delicious. If you're going to Taco Bell and you're going to get the combo, you got to upgrade to the Fries Supreme. Our producer, Chris, here is asking us to do some plugins. What does that mean, Chris? Why don't you come on camera and tell us what you mean plug-ins? Like, what do you want me to plug? Oh, Taco Bell. Yeah, I just plug them.
Nothing like fighting with the producer.
Yeah, I don't know what he's talking about. Yeah, so they're not a sponsor yet, but we're coming for you. We want that sponsorship, Taco Bell.
And if you guys want to hear more about Taco Bell in the future, apparently, don't forget to like and subscribe.
Thanks, everybody, for joining us. We're going to see you tomorrow. We're supposed to have, I think, Frank Holmes on. So
provided our streaming provider will allow us. Yes.
yeah, and provided he didn't watch today's show and decide that he doesn't want to talk to a couple of ding dongs who one who loves Taco Bell, the other who loves reading news wires all day. Thanks for joining, everybody. We'll see you tomorrow.